I am unable to earn a living through trading. The data from SEBI is not beneficial. In general, I am not making any money. For the past 30 years, I have attempted to sell various things to different people. To create wealth, invest wisely and thoughtfully considering future impacts. It's quite challenging for you to speak in a straightforward manner for just two people. You tend to do a lot of research when purchasing something like a shirt or a shoe, and when it comes to buying shares, there are typically some tapes involved.
Hello and welcome to Market Pillars Uncover, an educational series where we provide you with insights from leaders shaping India's financial ecosystem. Today, we are pleased to have with us Mr. Rakesh Bhandari, the director at Nirmal Bang, who brings with him over 25 years of experience. He has witnessed the stock market and the evolution that has occurred in terms of materialization. He is going to share with us what he has learned and what he believes could be the future of investing in India. Thanks, Mr. Bhandari, for joining.
Thank you very much for having me.
You have been in the Indian equity market for over 25 years. Tell us a little about your early days. What attracted you to the equity market?
I graduated in 97, Mike. I am from Jaipur, so I came here to Mumbai for a job. At that time, the job market was not in a good shape. Someone suggested to me to try stockbroking. So I joined as a stockbroker. During that period, deposits were a new concept emerging and I was quite proficient with computers. I thought, this is an area where I am not lagging behind, I can actually be ahead. So then I joined the setting of deposit participants, focusing on some small bookings. During this time, I learned everything about the deposit process. I observed how the basic problem in dematerialization was related to the physical delivery issues. There was a limitation in the volume of certificates, primarily because stockbrokers were working around the clock 24 hours a day. The share certificates used to be transported in large tubs to the exchange. Today, a stockbroker manages volumes once handled by one enter. Demeton's volume growth is unimaginable. India's adoption pace is unmatched globally. The regulator's role is crucial in this process. Technology has been a key enabler in managing this rapid transformation. This reflects the maturity and scalability of India's financial ecosystem. Such growth is possible due to seamless coordination across the system. And it means that it is a comprehensive contribution. They initially began with a simple script akin to a blanket and then progressively expanded it. And thus, I believe the intermediary was quite certain that indeed this would evolve into something distinct. Subsequently, they explored future possibilities for the intermediary, leading to a transformation of the entire system. Capital Market was a broker for Liquor Limited in Mumbai, and having just one telephone line was considered a significant achievement. Nowadays, anyone can achieve that using a mobile phone. I witnessed the entire evolution. For me, it was a completely new experience. I happened to be there at just the right moment. After joining, I stayed with Nirmal for over 25 years. It was during this time that they began to establish their deposit services, which I found to be extremely interesting and engaging.
Can you tell us, since most views these days are from mobile devices, how would I have been able to purchase a single share in the time before mobile phones existed?
By the time I joined, NSE had already come and BSE also had a trading platform, but before that there used to be only one ring and it had limited. Brokers once spent up to 12 hours in sessions just to place orders. While regional exchanges existed, most trading was concentrated in Bombay, where operations were centralized. A telephone line was used for communication within the city. You'd call to get delivery details and receive a physical certificate along with a delivery sheet. This process continued for a long time until the Jenny transfer was sent, which included a name on the back. VSAT, or very small aperture terminal, was used across India. B's main office was in Bombay, communicating via VSAT. Now it's through phone lines and broadband moving to the internet. Back then, it was all VSAT. When screens displayed information, transparency increased. Settlements were weekly, not daily like now. People invested money and settlements happened weekly. This marked the beginning of digitization in Indian capital markets. It laid the foundation for today's fast, efficient, and technology-driven trading environment. And in settlement, some people used to invest their money only for interest purpose. Some people used to invest their money for returns before the delivery. They used to give delivery, so it means if today the new ones tell the kids, then they initially found it remarkable, but now it's a highly transparent and robust system. T+1 means you get shares today. It's very simple. You don't need to call anyone, you can do it yourself. Just open an account online, no physical contact needed, I believe, since
We've started this talk. Perhaps your one account can be opened too.
it is not easy to be insecure when ICC bank adds any time or before your coffee is finished. Your account think hours even before that.
Stay very true to the evolution over your 27 years, but it's quite interesting to note that in the last 5 to 6 years, there has been a noticeable increase in the number of participants in the equity market. More and more Indians are eager to invest and trade. According to you, what are the reasons behind this trend? One reason, of course, is the ease of access through mobile technology, which makes it so simple. Now, what do you think is the other reason for this growing interest?
Recently, many events have unfolded, the most significant being our nation's steady progress, driven by a stable government and other key factors. As prosperity grows, more individuals now have dual or additional income sources. With greater financial stability, people are exploring various saving options. Traditionally, they have relied on fixed deposits or the government's National Savings Certificate (NSC) as secure and reliable choices. Now, a growing number are also considering market-linked instruments to enhance returns while balancing risk. If it cannot even beat inflation, then people want to see more about what actions to take. So, I believe it is a market stop that resembles a mutual fund, which you can follow like a story. Over a span of more than 20 years, 12% is the lowest any mutual fund is recorded at. So, from 20 to 12%, if you compound 12 to 15%, and if over 20 years any IRR provides, you can utilize it to build wealth. I think that is the most significant change people see today comes with strong regulatory measures. As a result, stability means broker issues are rare, and even a 4,500-point market fluctuation causes little concern. These developments have ensured high reliability. Beyond this, I believe the biggest driving force is the youth. Their confidence, tech savviness, and willingness to participate are reshaping the investment landscape. They are not just investing early, but also demanding transparency and better digital experiences. There's a significant difference between today's youth and those from 20 years ago. Back then, young people started by focusing on basics, aiming to acquire everything gradually. Money was limited, and owning a house was a major goal. Their single incomes were lower. Today's youth prioritize experiences, financial independence, and smarter investments early on. There is a lot of sparing money, salary levels have increased, plus you don't have to start from the basic. You get a house and a car in your inheritance. So you have sparing money, you can spend a lot. There are also a lot of things like earlier, a lot of money used to be spent on insurance, which is a term plan. When I came, I knew that by doing insurance, there was only a single term plan of leak of 3 lakh rupees. And there was an insurance company. Today you could buy the same premium which was being given for 3 lakhs. Today you can buy it for 1 crore in 28 years or 25 years. You can buy the same insurance of 1 crore. So if you don't need to invest in insurance, the insurance product was being sold as per the investment. So now you can invest that money in some other place and get a better rate. So many things have happened, which means a combination of all the exploration has happened, plus the code. So during COVID, people had a little time away from their routine. So they got to understand and they felt that this is a good thing. Provides better returns than traditional methods. I think that once you understand something, then I tell others, gradually there's no herd mentality. I think top fruit cities, everyone awards the top market. It was once limited to Mumbai, Gujarat Marwari and Gujarati, similar to national flavor and more.
However, even though there is some underpenetration relative to the population, there remains a significant amount of room for increased participation, which is why. Yet,
as the income level is rising, I think stock market will take a little time to grow, because till the time you do not have any penetration, initially people take tradition, but if you are looking at the biggest equity in share market through direct investor, then you can say under penetration, but this is the biggest under penetration market. I think you are 25,000 crores and it is increasing every month. You are not seeing any dip, no matter what the market is, but it is increasing regularly. So 25,000 crores every month is who has mounted. 3 lakh crore plus animal means like everybody is now charm brother. This is a very good thing. And people have seen what returns are coming in. the last 5 to 10 years. So they have made the money and they want to invest it because it is safe, it is the most. This growing trust is driving consistent inflows into the market.
What are your thoughts regarding your applications or digital platforms? Do you think that having a personal touch or the presence of a human advisor in some way influences the behavior of investors? Is this what you believe to be true? Now, what do you think about it? A blend of technology and human advice often builds greater trust and confidence.
I mean, it's like both things are present. So when young kids see it today, initially what happens is those who they do it at a cost-based broking house, they have a limited liability, they have to do it in the affidavits, but the regulator has made a lot of changes in the weekly settlement. So because of that, those people were not related to investment. What do they want to do it? Well, they got addicted to just one thing, they were doing it. But it was a small ticket size, but once you are, the thief is somewhat like 35 plus, then you have fewer responsibilities. You have children, or you begin focusing on one goal like your children's education, or perhaps you wish to purchase a larger house for yourself or plan to travel abroad. At this point, you need some form of wealth, but you cannot earn it through trading. In trading, you are observing CV data, but generally you are not earning. I have not allowed anyone to earn in funds for the past 30 years. So if you wish to build wealth, you must invest wisely. For that, you do it yourself, very easy to say. It's challenging. You research a lot when buying a shirt or shoes, but often buy a pair casually. This decision difference matters, so consider it carefully. So the one which has been properly researched is the best. So if you are absolutely new, then you can do it through mutual funds where there are very qualified fund managers and they are giving you 12 to 15% profit strategically. Self is huge, but if you want to do it yourself, then you should read the research report, give some of your time, and for that you need a proper broker who is human equipped in digital, but you need a physical digital broker. The combo one is quite similar to us, where you have access to research reports, allowing you to read the recommendations in detail, analyze them thoroughly, and even provide your own input. If you believe that it can be improved beyond what is written, then I think this is the method you can definitely use. So both of these options are at the level that you are doing yourself. I don't think that you have to spend a lot of time to invest. It's not like that easy that you buy shares on someone's advice. So instead of going on the tip, do your own research, and for that, read the research of the research houses that show proper research and track record, and everything is available nowadays. I think
you also addressed my next question, so big thank you to the new individuals coming forward to invest and energize the under 5 under Fox. If you wish to offer them advice, what would be the top 3 key pieces of advice? I understand you provided a significant portion in your initial response, but could you specify the top 3 pieces of guidance?
This is not Dream 11. There is a distinction between the two, so it is only Dream 11. The cost is 50-100 rupees. However, here is your hard-earned money which you wish to utilize for any future objectives you might have. If you desire to create funds without having prior knowledge, this is significant. I do not believe that marketing is the right approach. Initially, you might earn once or even twice, and it will feel amazing. However, the third time your confidence will likely grow, leading you to place more bets and use leverage. This will definitely result in losses. Therefore, it's important to invest systematically, aligning with your long-term goals. If you stay in the market for the long term, given that India's growth story remains strong and unchanged fundamentally, then everything including the company, if the decent ending isn't at 15%, then the market will not reach 50%. Therefore, if it grows by 15%, it will indeed grow by 15%. To stay in the market, manage your trading addiction well, focus on behavior and mindset. Constantly reviewing historical data isn't always needed. Understand patterns for informed decisions. Developing discipline is equally important for long-term trading success. This is key for long-term trading success. If you manage to control yourself from an early stage and observe your wealth along with your investments steadily grow over time, you will come to understand that developing this habit was indeed the right choice. This realization will affirm the correctness of your decision to cultivate such a habit.
There is indeed a way. Today, when we observe the Indian equity market, we notice that there are a significant number of new entrants. These include both investors and companies, with numerous listings on SM. Given this scenario, how do you perceive the investing ecosystem to evolve and transform over the coming 5 to 10 years from now? What are the potential changes and developments you foresee in this dynamic environment?
The primary objective of the capital market is to generate capital. This is because the Indian economy is currently performing well. There are numerous IPOs happening these days and people are spending significantly. In the past, the best talent used to go back to their own countries to start businesses. However, now we are witnessing the rise of many unicorns right here, thanks to a venture capital ecosystem that is very supportive. Individuals who possess a grand vision, along with substantial funds from the market, are finding great success in the small and medium enterprise segment. This shift reflects growing confidence in the local startup and investment landscape. Due to the influence of money, you find it challenging to resist being available to them. If their proposal has merit and they persist in displaying anger, then in my opinion, securing funds is not a difficult task. This is essentially how the entire system operates. This system is designed to reward those who perform well. When you perform, people are inclined to give you everything you need.
Would you say that today's investor has access to better information and research compared to what Devin had? I would have definitely said so about 10 to 15 years ago.
Not this applicable not only to a market in all respect, because of availability of information easily available at fingertips, and now every day is like an chatbot, whatever, you are just insistently will get the answer and very in your language, in your understanding, so definitely hooting. But I think the biggest difference is that the earlier investors would not have been able to understand even if it was available or not, because there was no money. Now that you have accumulated a substantial amount of money, you are diligently researching potential avenues where you could wisely invest it. Therefore, there are two investors involved, and today you find yourself more informed and knowledgeable than before. This awareness helps in making smarter and more confident financial decisions.
As you mentioned, the information symmetry that used to exist was once limited to Bombay alone. Even when it comes to investing, there are numerous segments within the equity asset class. The mutual funds we've talked about include AIF, PMS, etc. I believe the market is becoming highly segmented and the options have become quite extensive, don't you think?
There are various types of investors. For a high net worth individual, if they are investing 50 lakhs, the portfolio management service entry point is 50 lakhs. However, for a small investor, the entry point for an investment fund is 1 crore. This highlights the differing thresholds based on the investment category and investor profile. I believe it is like catering to the diverse needs of investors. PMS is designed for those who have money and are willing to take risks. They seek something like a mutual fund clone, as an example, so their options are limited. However, if someone wishes to invest in a specific sector or through PMS, there is a certain flexibility in it, which can be more advantageous than a mutual fund. In such cases, they feel that a mutual fund might offer better returns. At the same time, small investors faced issues with the regulator in PMS, which offers high returns but greater risk. Thus, mutual funds are better for them as they allow smaller investments.
A mutual fund is a beneficial choice. Nirmal Bang, of course, the whole dessert of services, not just equities, but commodities, insurance, NPS, etc. An interesting approach is the benefits that you offer to your clients. How do clients benefit from what you offer? They get a one-stop solution tailored to their diverse financial needs.
So like this, when you go to a multi-stored mall or a big one like DMart, you save your time, plus you understand what is where and what is kept according to your understanding. Similarly, there is an investor who is making insurance available to everyone today, so he works. Apart from that, there is medical insurance and the basic. This structured approach benefits people by offering everything in one place, just like a well-organized store. It brings convenience, clarity, and better decision-making for individuals. You should take proper care of all your things. So apart from insurance, you have NPS, which means mutual fund. And if you want to make direct investment through booking, then you get all the things in one place. So your RM understands your need, and plus you don't have to go to different places for all the things. This makes financial management simpler, faster, and more personalized. You don't need to invest so much time. You can spend your time somewhere else. It makes sense to have a single RM to understand your entire requirement. This ensures better coordination and a more personalized approach to your financial needs.
Do you often contemplate the idea of having multiple riding accounts that are different and broke? What are your thoughts on that? Engaging in management with confusion is not advisable and generally not a good practice to follow.
I am not suggesting that in the end you will end up with 4 separate bank accounts or even 4 different trading accounts. Now the market is very stable and well regulated, so there's no fear of brokers taking advantage. SEBI has become very strong, implementing numerous regulations over the last 34 or 35 years, ensuring everything is secure. If someone new commits a fraud, it hardly becomes a significant issue. Otherwise, they have established such a stable and robotic system that you don't need to worry. Your comfort holds more importance. If you take charge of a place, you will receive attention. There's no need to go all out like a fort. One broking will certainly provide more. There will be a noticeable difference, so without a doubt, you should do more. Additionally, you should be aware of the various aspects, understanding how you can manage your own work. Note your prime business, as it doesn't make much sense otherwise. Don't overthink what the purpose.
When it comes to Nirmal Bang, there isn't a particular segment that excites them the most. However, as an advisor on Ether technology, is there anything new or interesting that you are focused on?
As we progress, financial planning and wealth management will evolve significantly. People will likely pay more for these services. Previously, many sought free advice and hesitated to spend even on doctors. Hiring a financial planner was a low priority. Now people are maturing and seeing the value these services offer in managing finances well. This change marks a shift from reactive to proactive financial behavior. You should pay for the service, and financial planning has many details. Some say not to take a housing loan, but I believe you should. If you can afford it, take a housing loan even if you have money. A housing loan gives 8 to 9% and you can invest at 12 to 15% interest. This earns you a net interest margin of 34%. This strategy helps you make your money work more efficiently while retaining liquidity. It's a smart way to leverage low-cost debt for higher returns. Only someone with a definite plan for you can share these insights. You will have a conversation with your relative or friend and you might feel worried because your friend doesn't have the money, but go ahead and do it. Why should you be prepared? You invest that money and you can manage both day and night. Therefore, I believe that a proper financial plan is not just about making investments now. It's about how you plan very well when it comes to finance. It's about building long-term clarity and confidence in your financial decisions.
The point is that even if tomorrow you feel that I don't want to be in the market anymore, you can easily redeem the change that has come about it in the next, in the last. And I'm curious about you, especially the equity market. Can you share other fascinating hobbies? I'd love to know more.
So I do run marathons from last 20 years. Stand Charter Mumbai Marathon started then. It has become a journey of discipline, consistency, and personal growth over the years. I have completed 36 full marathons across more than 30 countries. Officially, I have participated in these full marathons, I believe. Whenever I visit a country, I attempt to run at least a half marathon or preferably a full marathon if it is possible.
Finding time to train for that after all this
is something very good. So this, now like there is a glass of normal milk. If we add a little saffron and a little bit of, we will add beds and almanacs whose cost will be very low, but their value will increase for time. So I think everybody has 24 hours. If we spend 1 hour on exercise, then the value of the remaining 23 hours will definitely increase. So people feel that it is truly a waste of time, or perhaps it is not the right thing to do. I simply do not have the time, and I feel it is pointless because your 23 hours will be more fruitful. Getting enough sleep is crucial and will experience deep sleep. If you achieve deep sleep, then you will have energy to trade and your working hours will be more productive. As a result, you will achieve good outcomes as well. So it is important to understand this fundamental concept.
Okay, all right, Mr. Rakesh Bhandari, very insightful conviction and very interesting to know how the Indian equity market have evolved. Thank you so much for joining us.
Thank you. Thank you very much.
That brings us the end of this episode of Market Pillars Uncovered. Leave as your thoughts in the comment section on what's your thoughts of how the Indian market has evolved in the last 20 to 25 years. Thank you so much again for watching and stay tuned to Money TV.